Hi everyone and welcome to today's morning report with me, Richard Perry, market analyst at Handtech Markets. This is for Thursday the 5th of June. It's ECB day, finally it's here, and markets can actually now hopefully get out of this consolidation phase that they've fallen into and take a bit of direction once more. 12:45 is when we find out the rates decision, and after that we're going to find out the what Mario Draghi is more than likely to initiate as some sort of further unconventional monetary easing in the forms of possibly an LTRO, some sort of funding for lending scheme that the ECB could engage. So this is basically what markets have been waiting for. They've been consolidating probably for the past week or so now, and no real direction in a lot of the markets that we look at, and that is hopefully going to come to an end today with a bit more direction being found. So what we've seen overnight, very slight gains on Wall Street again, very small creep into all-time high ground once more, but Asian markets couldn't really continue that overnight, and European trading actually has started fairly cautiously on the downside, very slight losses on all CAC, DAX and FTSE in early trading today. In terms of, as I said, in terms of the ECB, which is what everyone's waiting for, the 12:45, the likelihood is that we're going to get a rate cut of the corridor. Of the rates corridor, that is where the main refinancing rate, the market is expecting a rate cut between 10 and 15 basis points. Additionally, the market is also expecting the negative deposit rate as well. The deposit rate at the moment stands at zero. The expectation is that that will be taken negative to between 0.1 and 0.15 basis points negative, which would mean that banks would then need to pay the ECB to park money overnight, and that's attempting to try and encourage them to boost lending instead of just hoarding cash. Furthermore, at 1:30, the real fun could start, because basically those two rate cuts have already been well touted, and I think markets very firmly expecting of that. And the real fun, as I said, could start at 1:30 with Mario Draghi's press conference, where he is expected to also announce some sort of extension of the LTRO, which could involve some sort of funding for lending, as I said. And it depends on whether he goes further than that. I mean, potential for quantitative easing, although it is unlikely today, given the hurdles that the ECB would have to get over to do that, i.e. the German constitutional situation, and also persuading the Bundesbank that that is the right way to go down, and also what form it would take as well. There's very much debate going on as to what exact form quantitative easing could take, so it's unlikely that's going to be happening today. Okay, so what the impact that's going to have on markets? Well, as I said, the rate cuts are expected, and the LTRO is also expected. So anything any less than that would likely to produce a bit of a short squeeze on the euro, and a jump in euro prices across the board, and also probably induce a big correction in currency markets. A big correction in indexes, equity markets today. Furthermore, we've got the Bank of England at 12 o'clock. That's going to give a rate decision, and no change is expected there. But also, we've got the weekly jobless numbers, weekly jobless claims that are expected to come in at 310,000 today, and that is slightly higher than the 300,000. Just a very quick look at the VIX index overnight. Very interesting, actually. We've seen a bit of a jump in the VIX in the past couple of days. And that is despite the fact that Wall Street has been creeping to further gains. So maybe starting to think about possibly a correction. Interesting, but we'll keep an eye on that. And also we've got the dollar index, which remains nicely above that 80.4 breakout level, which is the pivot, as you can see, throughout the past 10 or so months, and yeah, 80.4 is the level there, but a slight tailing off of the dollar today as it's come under a little bit of pressure early on. Okay, my chart of the day today is the Swiss franc. To be honest, uh, as I said earlier, a lot of the charts that we look at have been trading sideways, and the Swiss franc is fairly similar to that. Swiss franc broke up above the 89.50 mark and is consolidating since then. But with that consolidation, we've seen these momentum indicators roll over. This recovery that we've seen since mid-May has just run out of steam, and these momentum indicators are now beginning to give corrective signals. You've got a crossover signal on the MACD lines and a stochastics crossover there, which subsequently has been confirmed by a cross back below the 80 mark. So it does suggest that upside potential is becoming limited in this dollar Swiss chart, and the potential for a correction is growing. You've got this is on the hourly chart. You've got the as I said, this trading range that could become into a top pattern if we see the pressure to the downside increasing on an intraday basis. These momentum indicators are fairly neutral, you'd say, so no major calling of a top pattern, but you could see a drift back towards the lows of this trading band, which could constitute that unwinding of a correction. Those lows come in at 89.47 and 89.31, and that 89.31 does mark the potential neckline of a top pattern. So if that does break down, but I'm not calling it breakdown quite yet. I'm just saying that this recovery in dollar Swiss has run out of steam, and it is potentially going to come under a little bit of consolidation at the very least, if not corrective pressure. Okay, well, I wish you good luck in your trading on dollar Swiss today. I think anything is going to be moved around by this ECB decision. Certainly at 1:30, I think the real fund's going to begin. So that's going to be when I think the main moves on these markets are going to be seen. But until then, I wish you good luck with your trading, and I'll speak to you later. Thank you.